Hello, I'm Richard Mize, real estate editor for the Oklahoman and Oklahoman.com, talking with Mike Buhl of Commercial Realty Resources Company, CRRC, in Norman. He's a multifamily or an apartment property broker, and he's just out with his 2019 apartment report summary for Oklahoma City, and we're going to talk about it.
Great.
First question I have is, where are all these buyers coming from?
All right. Well, first of all, technology is a great thing when you're trying to find buyers these days. There's no one spot, but if you're gonna narrow it down, Texas, California, a lot of buyers coming from there. And then the way technology has exploded, you can reach buyers everywhere now. You go to the LinkedIn and all the other avenues that you can access buyers through the internet. And so there's a lot of syndicators reaching out to investors that way.
Do they look at property mainly as paper investments or as actual sticks and bricks on ground in Oklahoma City as opposed to in Waco or as in Little Rock or whatever?
Great question, because I think a lot of investors that are getting into the business kind of behind the scenes are more paper. Mm-hmm. And then you've kind of got your sponsor on the front end who's more of the bricks and sticks guy who understands the asset, and then they're out raising investor money. A lot of it's coming from people will tap their 401ks and things like that to put into real estate.
And so that's like a manager of an LLC or some other form of
correct
syndicate that is on the ground and that does know the property and does know the market. And the other stakeholders may or may not.
Yeah, that's
why he's there.
That's exactly right. In a lot of cases, I think that some of the behind-the-scenes investors may or may not have ever even seen the real estate asset.
Right. Now let's talk about value-added property. It's been maybe almost 10 years that you and I have had this conversation once or twice a year, and value-add has been the mantra for all this time. Is there anything left that you can buy and add value to? In a nutshell, that means buy, renovate, improve occupancy, raise the rent, improve the value, and then either hold or sell. But that's what we mean by adding value. So is there anything left out there that hadn't happened to you yet?
All right, two answers to that. Yes, in terms of everything's labeled value add anymore. From a broker standpoint, if you don't put the term value add on it, buyers kind of pass it over. That's what everybody's looking for. Now the reality is exactly like what you say.
Yeah.
Is there anything truly left that can add value? Some, yes, but for the most part, when you look at where values have gone in Oklahoma City, and then you look at rent structures and occupancy, you can look at a lot of different reports on the surface and they'll say, some rents have gone up 4 or 5% in some submarkets. Overall, Oklahoma City, I think, is more of a 2% kind of rent growth market. If you look over time, if you look over 3, 4, 5 year period. So when you look at having to go in and do rent growth and occupancy, it's a difficult equation to put to the value add.
Now, you mentioned in your report that maybe some properties are in their second or third go round of value added investment in the past 5 to 7 or 10 years?
Correct. And I think
that's some pretty daring money. I mean, that's pretty brave money, I would think. So.
Well, brave. I was thinking of another word, but let's go with brave.
Devil may care.
Let's go with brave.
Casino way of thinking about it, maybe. I mean, I don't know.
Well,
the money's incredible. The money has never stopped.
That's
in 20
exactly
years.
right. The numbers just keep going up. Now, here's I think what we don't know, and we can just kind of guess at this number, is when a value add is now in its second go around or third go around, is it because rents are going up and the asset is doing better and values are going up, or did it not work the first time and now they're selling to the market that wants to see the value add label and there's more investors coming in? We don't know the answer to that. And frankly, I don't know. It could be a year, it could be 2 years, 3 years. I don't know. At some point, the market will tell us the answer to that. But I don't think we know that today.
How far behind do you think you are in the tenor of the market right now? I mean, in this report, all annual reports are stopped at a point in time, and you seem to wrap this one up in November, December, right? So how is this still the moment that we're in, do you think?
Still the moment,
Yep.
yeah. If not even trending further up because of interest rates. You know, that's what's this time last year, we probably had the conversation that I thought rates were going to start trending up, and I didn't make it up. I mean, that was the Fed.
Right,
I mean, they said it, not me.
Sure.
But rates have gone down, and rates continue to trend down. So as long as interest rates go down, I've said it before, I think a lot of these sales are more driven by interest rates and the ability to finance a property than true demand in the market.
Yep.
So as long as interest rates stay where they're at, they trend lower, we're going to keep seeing this trend continue.
And you know, one thing we seldom talk about actually is renters. Because you and I come at this for purposes of this discussion from an investment standpoint, from a property, sometimes a property management standpoint. But when rents are going up because value has been added to a property and it's a better place, there hasn't been any hiccup in demand though among people that live in apartments, has there?
No, that's and again, I mean, if you could ever really like drill down to the numbers, you know, there's a lot of tenants living month to month. Okay,
Well,
so you know, rent increases.
A lot of homeowners too.
Well, so
Well, it feels like it
these
sometimes.
value add,
Yeah, yeah.
and every time you label something value add, it's going back to your comments earlier. Rents have to go up. Well, you know, unless incomes are going up at the same pace, it's putting stress on affordable housing.
Well, but not enough to cause people to quit building apartment complexes and to quit buying them and not flipping, but buying them and adding value to them. I mean, there hadn't been a slowdown
Well,
in that, has there?
not at all. Well, no. In fact, I mean, if you look at the you know the downtown properties that have sold recently, they were labeled value add.
Right.
So
And we've had some little pockets of, that's a bad word, but little pockets of oversupply here in the metro. But we're worked through that mainly now, aren't we?
I think we have. Yeah, absorption has been very good. Now, again, I guess if you look, you know, I track a lot of land sales as well. I mean, there's 2 or 3 more that are going to come out of the ground this year. You know, probably another 2,000 units if you look at the next 12 to 18 months. So the market's not done.
I guess when somebody rolls those dice and it doesn't come back with the return, then they'll quit doing it.
Well,
It hadn't happened yet.
Well,
and the ones that are in trouble that I've seen were money problems, finance problems, not operational problems.
right.
I mean,
right.
except for the obvious ones that are just about fixing to fall out of D class into the whatever's past D.
Right, right.
okay.
Well, and the one thing that kind of masks that that as well is interest rates are low, but financing is done on interest-only payments these days. You know, so especially if it's a newer property. You know, I know some buyers that have gotten 4, 5, 6 year interest-only periods on their loans. So that covers a lot of sins. You know, when you can get that. When you're talking a 4% interest rate and now you're paying interest only, there's a big margin there for you. So.
Wow.
I think as long as those rates stay where they are, that margin stays where it is, we're going to see the market continue.
Your report is online at, what's the
It is
address?
www.crrc.us.
Real good. Mike Buhl, thank you for joining us. I'm Richard Mize, real estate editor for the Oklahoman and Oklahoman.com.